And in fact, up until kind of the mid 2000s, it was really hard to trade commodities. Maybe you could buy companies that traded in the commodity world, or they had some effect on their earnings. But it was only in the 2003 to 2005 period when they started rolling out exchange traded funds that are based on a certain commodity or the futures on a commodity. So now you can pretty much buy an ETF of anything out there, gold, tin, aluminum, any commodity out there has an ETF that's essentially like a pure play on the commodity. And most of those are running now, Chris, aren't they? Because of the war, basically. The war turned it into a bear market. So now we have the typical stuff that goes on in a bear market, where the technology names are in a bear, where we have big down days and then huge up days. Usually the largest up days in the market ever are in the middle of bear markets, where the market goes down 3 or 4 days in a row, and then there's a big relief rally and everyone jumps in. We had a day when the Dow was up almost 700 points this week, and there's a big relief rally. But then it goes down again. And of course, we're up a little bit today, but we were down yesterday. So it's just a negative period of time for the market, characterized by lower highs and lower lows. A bull market, a rising market, is higher highs and higher lows. So we still see the market making new lows. And technology has created so many efficiencies, but the stocks got overheated last year. So technology is correcting sharply right now, and the stocks are going down. So anytime we have a rally, then we have another big down day in technology. But they will bottom at some point. So if folks are looking to invest in technology, we might get an opportunity here relatively soon. But it might be a while too. We're not really totally sure. But we'll see the bottom and we'll be able to take advantage of it. But there's still growth in technology, isn't there, Chris? We had mentioned for years that Bitcoin was taking all the action where people used to buy gold, and now Bitcoin is kind of stabilizing in the mid 30,000s or 40,000 after a big run last year, and now gold is breaking out to new highs. So Bitcoin was the new gold. Now gold's the new Bitcoin, or maybe gold's the new gold, but it's running up anyway. And then we had a short squeeze on nickel, and it actually affected a Chinese bank that had to be acquired, I believe, by JP Morgan. Isn't that right, Chris?